Have you ever wished of a mortgage program that focuses on paying principal before interest, or one that would allow you to pay off your mortgage in a quicker fashion without changing your budget? Well, I'm really excited to share with you a program that was engineered by CMG that does just that. It's called the All-in-One product. And I've got Dave Herbst here, the VP of the All-in-One Finance from California. Welcome.
Thank you, Carey. I appreciate it. Thanks for having me.
I'm so glad that you're here. I'm really excited to share with everybody about this product. It's not a product that has just been rolled out. It's been in the works for a long time.
It has. We've had it out for 14 years now, helping homeowners across the United States. Tens of thousands of people have benefited from this loan program. It's wildly different, and I think you hit it on the nose. What makes it so different is that it pays principal first.
Yes.
And that helps people get out of debt faster. It's pretty simple.
Huge. Huge, absolutely. So the magic behind this program is where it combines the mortgage and your checking account, is that right?
That's correct. This type of mortgage is actually very common around the world already. It's called an offset loan or an offset mortgage, so it combines personal banking and your home financing needs in one account.
Amazing.
It is amazing. It allows you, if you think about it, you make your mortgage payments from your checking account already. Right? And the rest of your money kind of sits idle waiting to be spent for most of the month, and you're not earning a lot of money in return.
Sure.
By combining these two accounts together, what actually happens is your money goes to work the day that you earn it.
Okay.
And the benefit is that you reduce your balance with those dollars, and that actually reduces your monthly and your annual and your total interest.
Amazing. So it's a daily interest calculation.
It is.
That right?
It is. Instead of being amortized, where you have all mortgage products that are common today, a 30-year fixed, a 15-year fixed. These are loan programs that were born out of the Great Depression era.
Okay.
And they were great back then. They don't really fit the need of homeowners today. If you think about it, the mortgage programs that we use most commonly today are what are called forward amortizing loans, where your payments are actually scheduled in advance. That means the amount of interest you're being charged and you have to pay on a monthly basis, where your balance is, how long it's going to take you to pay down. That's all predetermined by the banks. This loan is the opposite of that. You actually get to use your income dollars to impact your loan principal on a daily basis, and therefore offset the amount of interest you actually have to pay. And that gets you out of debt faster. Amazing.
So does it matter how much that income is, or is just the focus on utilizing that extra income that we have sitting in our checking account? Yep. So many of us have that.
Yeah, it's just, that's the thing. We all know how to use a checking account. Those of us that can qualify for a mortgage, we are earning income already.
Okay.
So this loan benefits people without a change to their budget, their lifestyle, without depending on interest rates. It's just a higher use or efficiency of their cash that they already have.
So who would be the right person to qualify or look into this type of loan?
Ultimately, this loan benefits people that don't overspend. I mean, you can't get very far in life if you're spending more than you make, right, on a routine basis.
Sure.
So households or home buyers that budget and they know that they can't spend more than they make, so they're cash flow positive. But this is intended for new home buyers, current homeowners that are interested in shedding away a lot of that debt and saving money. Folks that are looking at retirement and wondering how they're going to make it because they still have years left on their mortgage and a lot of money to pay. Really ultimately retirees, business owners, self-employed people, high commissioned earners, W-2 wage earners. Just your average American household that knows to live within their means and doesn't overspend.
Wow, I mean that's so many people out there. So it's not just for that luxury buyer, it's really for anybody and everybody, which is a wonderful thing.
It really is, yeah. It fits the need of most Americans. There's 48 million households across the United States today that actually owe a mortgage. Despite the fact that homeownership participation has fallen across the country over the last decade or so, mortgage debt continues to rise. And that has to be solved for at one point or other in life, right?
Sure.
And not many of us can retire on time or comfortably if we have a mortgage still outstanding. So this is a solution to that, and I think it really helps middle America, your high net worth individuals, but also even your lower income Americans that are looking to save money and not overpay.
Right, and lessen the cost to purchase, right?
That's exactly right.
The long-term cost you were referencing,
Yeah, if you think about it, real estate is great because there's really no other way you can grow wealth. In fact, most Americans rely on their home equity dollars to retire with.
Sure.
They'll grow more equity in their home than they will actually be able to save in their retirement accounts.
Right.
But the sad part about it is that we have to rely on home financing, a mortgage, to make that possible.
We have to borrow.
Exactly right. And so a mortgage can actually increase the home's original purchase price by anywhere from about 40–50%. And that's what this cuts down on. It's just designed to shrink the cost of a financed house.
Wow.
So you pay less, you get out of debt faster, you have more optionality.
Wonderful. You know, what I got really excited about, and if you just think about it, we have our paycheck coming in, automatically it's going to sweep into paying down our mortgage, and it's going to be a daily calculation, which is going to allow us immediately to start to save more on our monthly mortgage payment.
That's exactly right. There's no change in budget, no change in behavior. Most of us already know how to use a checking account.
Right.
Your money just goes to work for you without you changing a thing, and it's always available to you for 30 years.
Sure, and is it for the person that has no debt? I mean, I'm someone with a car payment now after 17 years of driving one without a car payment, but and I've got school tuition for my little one, I've got multiple bills that have to be paid. So this product is not for somebody who's debt-free, right?
Yeah, those people that are already free and clear, right, debt-free on their property, good for them. It's about a third of the housing market today. That also happens to be the little bit older generation because they were taught to actually pay back the money we borrowed, right? Sure. Things have changed. So for that person that's looking just for some extra liquidity, I mean, maybe just a traditional HELOC or something like that might be an easier or better product. This is really intended for those people that are buying a home, are putting down 10 or 20% down on that property, or already have a mortgage because they're established in that house, and they ultimately don't want to have a mortgage on their hands for the next 30 years of their life. This can pay it down rapidly. How much more rapidly? In about 9 to 11 years on average.
Wow, impressive.
It's life-changing.
Yeah, it's life-changing. And like you were sharing before, like that car payment that I have to pay, so let's say it's due on the 20th, I can sweep my paycheck on the 1st, lower my principal, and then I can make that car payment on the 20th and save all that extra money because of that daily interest, right?
Now you're proactively engaging the mortgage versus just kind of robotically, somewhat passively making a payment, right? Because you're not controlling how much of your money is going towards interest or principal. On this loan, like you said, 100% of what you put into it goes towards principal. That reduces your balance, therefore your interest. Now you get the added benefit of paying your bills a little bit later, because you're going to save more money that month.
Right, or exactly the due date, per se.
Exactly, right.
So for those that say, well, why don't I just get an equity line? And to be honest, that's what I have right now, right? So I purchased my house with just a first lien equity line.
Sure.
And what you were sharing with me earlier, which was making a lot of sense, I make a large payment every month, but it's kind of like I'm just chunking money. If I'm not there moving money daily and spending that extra time, I'm not really acquiring the same benefit as if this product does. And really, it's the all-in-one product, which is combining both that checking, that sweeping, all of that technology together for you. Is that right?
Yeah, absolutely. It's funny you use that term chunking because that's actually what it's known as.
Okay.
Relying on either a credit card or a line of credit to kind of chunk away towards debt reduction, right? And these systems and this methodology has existed for a very long time, but it's inefficient. It's manual, as you know already, and also regular HELOCs don't compute interest on a daily basis. Right. So even as you move money in maybe on the 1st, but you spend the bulk of it out on maybe the 28th, you're not picking up the benefit of the daily float of your money. Instead, on that traditional HELOC, your interest is calculated on your average monthly balance, not your daily. In the all-in-one, it's recasting or recalculating daily.
Wow.
So now benefits you to pay your bills later at the last possible moment so you can actually save in mortgage interest. And the thing to remember here too, Carey, is that when you spend less of your income dollars on interest cost, you retain more of your own money.
Yeah.
What a wonderful thing.
What a wonderful thing, absolutely. We can retire early maybe.
Totally.
So as we were talking about the equity line, I know the traditional equity line allows me to draw up to 10 years.
Right.
What's different about this product?
Well, this product is a 30-year term home equity line of credit in first lien position.
Okay.
So there's no balloon payment, there's no amortized repayment schedule, and it allows you to access your home's equity dollars over a period of 30 years.
Wow,
So consider paying off your mortgage in 9 or 10 or 11 years like most people do on this loan, and still having access to your equity dollars based on your original home's value. Yeah, you don't have to refinance again, you don't have to do anything. It's almost the last loan you'll ever need.
So if you are in that situation where you needed to pull cash to purchase a new car or to have a school tuition or things later on in life, you're able to pull that at that time.
You're in effect becoming the bank of yourself.
Sure.
You borrow from yourself instead of having to go get another loan, whether that's a mortgage or an automobile loan or anything like that. You write a check. This is also, that's on that point, it's great for real estate investors.
Yes.
Because this loan creates greater cash flow in that rental property because you're reducing your monthly interest cost, and it makes it easier to fund future investments because you just write a check.
Amazing. So you were sharing with me too that there's so much technology within this program where I could even, take that rent check that I received on one of my investment properties.
Totally.
I could take a picture, I could get that deposited in, and I can lower my principal by the end of that day.
Yeah, absolutely. So for those real estate investors out there, anybody that has
Right.
a rental property, imagine receiving that rental income check on the 1st, right? That's when rent's due. You open that envelope, you touch on your all-in-one loan mortgage app on your phone, you take an image of the check.
Amazing.
And that amount of money drops the principal balance of your own mortgage that very day.
Huge.
And so you start saving. It's beautiful.
So this all-in-one program just sounds more than just a mortgage.
Yep.
It sounds like a financial tool. Do you find that the financial advisors out there really find some interest in this?
Yeah, great question. Fiduciaries gravitate to this loan because if they're holistic in their efforts to help their customers, one of the biggest barriers that their customers have is a mortgage. And of course, the amount of mortgage interest that comes with the loans that are so common. By reducing the size of your mortgage rapidly and the amount of interest you have to pay,
Right.
what that does is it frees up dollars that could then be purposed towards securing your retirement,
Huge, yeah.
paying for your kids' college tuition costs, paying for healthcare, supplementing the needs of your siblings or your parents.
Right.
There's a variety of reasons why the American household feels pressured today, and a lot of them do rely on the advice of an advisor. This is a perfect tool for a financial advisor in their business to help their clients further their goals.
Well, I'm surprised my financial advisor didn't even tell me about this, but I'm really excited to learn more for my family and start saving today. So for more information about this next generation loan, give us a call. My name is Carey and I'm with CMG Financial and My Mortgage Team. Remember, mortgage loans is what we know and improving them is what we do. We'll see you again next time.